In this video, we're going to be going over exactly how much dividend income I made in the month of September from a $238,000 dividend portfolio. And like always, to break this down, we're going to be looking at the ticker data portfolio tracker, looking at my investment dashboard, my dividend dashboard, dividend calendar, and my daily dividend calendar. And like always, we're going to be projecting out to see how long it will take me to achieve my long-term goal of one day living off dividend income. And like always, if you'd like to be able to use this spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Dividend Watch for sponsoring this video, but more on that later. Let's go ahead and dive in. If we go ahead and zoom in, again, we can see the portfolio right now sitting at about $238,000, and I've been very happy with the gains that my portfolio has been seeing. Like always, there's a huge misconception that dividend investors don't see any capital appreciation. And really the answer is it depends what type of dividend investor you are. Really there's subcategories within dividend investing. And for myself, I'm primarily a dividend growth investor. I'm looking for stocks that grow free cash flow at a high rate and as a result, grow those dividend payments at a high rate. So really we have to think of things in terms of the dividend pyramid. Down here we have higher yield but lower dividend growth, and up here we have stocks that are maybe lower yielding but grow those dividend payments at a high rate. Right now, I'm looking to buy stocks that grow dividends at a high rate, and I'll show you why just a little bit later in the video. But spoiler alert, it's because my long-term goal is to one day live off dividends. Now, if we keep moving forward, we can take a closer look at what my allocation currently looks like. Cash is about 7.4%, and stocks about 92.6%, and total holdings is about 29%, but it's very possible I'll be trimming a few holdings in the near future. Now, what's interesting about the past month and the gains that I'm seeing in my portfolio is typically, according to the data, September is by far the worst month in the market. With the exception of February, which has historically been slightly red, September is really the only month on average where the market sees poor returns. So I got comments in my videos and over on Twitter and in my newsletter, dividendology.com, over the last few months from people asking, should we even be in the market during September? And the reality is, even though the data shows September has been historically bad, we simply can't time the market, and this past month was a great example of this. The S&P 500 had a phenomenal month. It was up by about 4.6% in the last month. And in fact, one of the positions that I added to my portfolio earlier this year, and I've stated that I'm very bullish on, I've talked about it a lot on the channel before, is ASML. I'm now up over 50% on my ASML position. This was a stock that I was talking about on my list of undervalued dividend stocks that I send out every single month on dividendology.com. ASML is one of the most important tech companies in the world. They are at the very top of the AI semiconductor value chain. Basically, everything starts with ASML. And sentiment for this stock earlier this year wasn't too good. We can see about a year ago, there was a huge sell-off from the high 870s all the way down to around $650 per share. It stayed stagnant and then went even lower, all the way down to around $595 per share. But the overall growth trajectory over the next 5 to 10 years for this stock hadn't changed. In fact, analysts are still projecting just rapid earnings growth for this stock. Look at this. Over the next year, 40%, 7%, 20, 11, 22, 13, 16%. So we're talking about a projected high double-digit earnings CAGR. That stands for compounded annual growth rate. And what management told us in their recent earnings report is they expect to continue to grow their dividend payments as long as their free cash flow and earnings continues to grow. So if they're growing free cash flow, if they're growing earnings at that high of a rate, I think it's safe to assume that, at least over the long term, dividends are going to be growing at a high rate. And now in the last month alone, this stock is up 38%. This is a stock where I'm very glad I was able to add shares when it was in what I would consider an accumulation phase. So while that's one of the stocks that has done very well, especially in the last month, there's plenty of positions that I've held for more than a year, unlike ASML, that have done really well. And obviously the huge outlier here is Broadcom. I'm now up 555% on this position, and my yield on cost compared to the current yield is actually very impressive as well, but we'll touch on that in a minute when we look at the dividend dashboard. We can see there's plenty of big winners. Microsoft, close to 100%, JP Morgan, 196%, Caterpillar, 176%. We can see Jefferies Financial, a stock a lot of people don't know about, but I'm up about 115%, Apple about 86%, and there's plenty of other winners along the way, and even a couple of high yielders that have done really well for me, like EPD, 64%, Altria, 71.74%. I see people make the assumption all the time that high yield stocks can't see capital appreciation, and that can be the case in some circumstances, but there's undoubtedly massive opportunities with high yield stocks if you know what to look for. I put out a very in-depth video just about 2 weeks ago on high yield strategies that you should definitely check out if that's something you're interested in. And in fact, there's actually a huge advantage for high yield investors if you know how to analyze these assets. These types of investments typically get very limited analyst coverage, leading to a lot more market inefficiencies. So if you're willing to do the research, there's a lot greater opportunity. And that's probably part of the reason that the 2 high yielders in my portfolio that I've had for a little while now have done so well. Now, if we look at my allocation right now, we can see I do have a fairly large position in SCHD, the Dividend Growth ETF, and it paid out a very large dividend to me this month, which we'll touch on in just a minute. But for the most part, I'm fairly well diversified. My largest positions are going to be Microsoft at 7.4%. We have Visa about 6.2%, and then Broadcom 4.4%. Now, when people hear the term dividend investor, they don't typically think of these types of stocks. But again, we have to remember the subcategories within dividend investing. We're talking about dividend growth as it pertains to my portfolio. Stocks that have strong competitive advantages will continue to grow free cash flow at a high rate over the next few decades, and as a result, will continue to grow those dividend payments. Each of these stocks grows dividends at a double-digit rate, and it looks like that's going to continue into the future. Dividend growth is a byproduct of free cash flow growth, and ironically enough, share price appreciation is also a byproduct of free cash flow growth. Why is that the case? Well, we have to remember, management's most important task is capital allocation, and they have 5 options with free cash flow. They can reinvest back into the business, they could pay down debt, they could attempt mergers and acquisitions, buy back shares, or they can pay out dividends. So essentially, growing free cash flow gives management more ways to reward their shareholders. Now, I also track allocation by industry. This is certainly something you should be doing if you're serious about building out your own portfolio. Now, I'm not doing this the perfect way because technically I shouldn't have an ETF category. I should break that out, but SCHD is pretty well diversified for the most part. But other than the ETF category, we can see most of my portfolio is allocated to technology. And then number 2 is financial services. Now, what's interesting about this is Visa is one of my larger positions, as we just saw, and it does technically fall into financial services, but I'd actually argue it's more of a tech stock. Now, we can also see consumer cyclical about 6.7%, real estate around 6.8%, industrials 3.3%. We have healthcare about 5%. That's a very interesting sector right now. There's a lot of beaten up stocks in healthcare that I do think have some opportunity. We have consumer defensive, and then we have energy stocks at just about 2.2% of my portfolio. Now, there's more we can come back and look at later on this dashboard, but let's go ahead and get to what everyone wants to see, and that's my dividend dashboard. How much did I make in the month of September? So if we go ahead and zoom in on my historical monthly dividends, we can see this was one of my highest months ever. In the month of September, I made $1,185.77 in dividend income. And a large part of that was due to the fact that SCHD paid out its massive dividend payment to me. And it's very clear to see, since I've been tracking this, we're certainly trending in the right direction. Now, I typically get a few different comments when people see my historical monthly dividend income, or even when they look at things like on the top of my dashboard, the fact that my average monthly dividends is around $593 and my expected yearly dividend income is $7,125. Obviously, that's a really great start. I don't know anyone who wouldn't want an extra $600 a month. But a lot of the times I see the comment, $600. Yes, that's great, but that doesn't seem like a lot for a portfolio value at $238,000. And that's a good point. We need to address, why is this the case? Well, again, we have to go back to the fact we're focused on a dividend growth strategy. Why is that the case if I want to one day live off dividends? Well, this is such an important question to ask and an important concept to understand. What we have to understand as it relates to high yield versus dividend growth is which is the optimal strategy for you. I'm not against high yield. In fact, I think there can be some great opportunities in the high yield space, and as I get closer to living off dividends, I'll utilize more of those strategies. But the reality is that in the short term, high yield absolutely pays out more in dividends, there's no doubt. But in the long term, dividend growth strategy actually pays out more as the rate those stocks pay out in dividends continues to grow at a high rate every single year. Now, this is an example where we don't reinvest dividends. We can see right here is the point at which dividend growth would surpass high yield. What if we do reinvest dividends? Well, the same is still true, but it takes longer for dividend growth to surpass high-yielding investments. If you can understand this one concept as it relates to dividends, you'll be so much further ahead than most people who call themselves dividend investors. So the question you need to ask yourself as you look at your own portfolio and analyze your goals, if you're looking to one day live off dividends, you need to be able to project out what your portfolio will look like in the future, because if you can do that, you can know whether or not a dividend growth strategy versus maybe more of a high yield strategy is for you. If you're looking to maximize dividend income right now and potentially use some of that as supplemental income, then you probably want to lean more towards a high yield strategy. But if you have a very long-term time horizon and you're looking to maximize dividends over the long term, I'd really encourage you to take a closer look at dividend growth. Now, if we keep moving forward, let's zoom in just a little bit more. We can see portfolio value continuing to grow. 2025 certainly been an interesting year. In February, we're at 216,000. We dipped down quite a bit during the tariff scare, but now we're at an all-time high once again at about 238K. If we keep moving forward, we can see my dividend income by industry. This is absolutely something you should be tracking if you're building out your own portfolio, because most people, yes, they'll track what their allocation looks like by individual positions and even look at it by industry. But if you're planning on living off dividends, you need to make sure all your income isn't coming from one single place. And the example I love to give is we can see real estate makes up about 12% of my dividend income, even though real estate is only 6.8% of my portfolio. So you could absolutely have the illusion of diversification, but if one of your sectors gets hit heavily and you're leaning on that sector for the majority of your income, that would be a major risk to your portfolio, something for you to think about. If we come down here, we can see my dividend yield on cost. Now, if you'll remember, this is something I was talking about with Broadcom just a moment ago when we were talking about my gains. We can see with Broadcom, I have a yield on cost of about 4.55%. Now, that's interesting because if we look on Seeking Alpha, Broadcom currently has a yield of just 0.72%. Why is my yield on cost so much higher? And it boils down to two things. Yes, I bought in at a great valuation when the starting yield was a little bit higher, but two, Broadcom grows those dividends at a high rate, so my yield on cost continues to climb higher and higher. This is why Warren Buffett has a yield on cost of over 60% on his Coca-Cola position. He bought Coca-Cola years ago, and they continue to grow those dividend payments every single year. So now he has a yield on cost of over 60%. Pretty mind-boggling. But again, we can see the majority of these holdings are lower yield, but they are growing those dividends. We have two high yielders, EPD right here, that I've held for a little while that have performed very well. And then the most recent addition to my portfolio was MPLX at about 7.77%. If we zoom out, let's blow up my projected annual dividend income chart. And this is one of my favorite things to track, and it's extremely motivating for a dividend investor. And here's the reason why. When we look at charts of our portfolio value, we'll see a month where it might go up or a month where it could even go down a lot. Think of years like 2022 when the market dropped by close to 20%. For a lot of people, that can be a little bit scary. And if you're someone looking to retire during a year like 2022, it can actually be financially devastating. If you had $1 million portfolio and wanted to cash out in about a year and then the portfolio tanks 20%, that's financially devastating. But if you're looking to live off dividends and you buy stocks that grow dividends, have sustainable dividends, that's not something you have to worry about whatsoever, because every single year, the amount they're paying you in dividends continues to increase. And that's been the case for my portfolio. You can see the 1 month right here where we had a little dip. Well, that's actually because I sold out of some higher yielding investments and reallocated the capital to more dividend growth positions. So a short-term dip in my projected annual dividends, but really it's to maximize dividends over the long term. So the reality is this number only goes up. And even if I don't add more capital to my portfolio, which this month I actually didn't do, because I'm reinvesting dividends, because the stocks are growing their dividend payments, this continues to climb higher. So last month it was 7,058. Without me adding any new capital to my portfolio, this month it climbed to about 7,125. That's the snowball effect taking place, and it's only going to get faster. Now, before we move forward, I want to say thank you to Dividend Watch for sponsoring this video, and this is a great way to track your portfolio, track your income, and really just plan ahead. And the team over at Dividend Watch has added some great new features in the last few weeks. For example, one of the features I was messing with earlier today was the stock comparison feature. We're currently looking at Google and Microsoft. Let's go ahead and throw Apple in there as well. And we can see how these stocks have performed over different periods of time, but even more importantly, in my opinion, We can get a breakdown of the dividend metrics when they look at each other, dividend safety scores, valuation metrics, and fundamentals as well, such as gross margin. And they've even created a page where they reveal their top dividend stocks based on different criteria. So for example, if we wanted to look at their top 10 dividend growth stock ideas, we can see them here, and I'm excited to see Microsoft at the top. And of course, in my opinion, one of their flagship features is simply tracking your portfolio and the beautiful dashboards that they provide. You can see your projected annual dividend income, your portfolio's yield, and exactly when those dividend payments are actually going to be coming in. So be sure to check out Dividend Watch at the link in the description, and you can use code Dividendology at checkout to get 20% off annual plans. Now, if we keep moving forward, we can see my personal dividend calendar, and I like dividend calendars for a few different reasons. One, I can see how much I made in dividends each month over the years. I can also see how much each position has paid me out since I've been holding the stock, but most importantly, like I always like to point out, I can actually visualize what that dividend growth looks like. Because I reinvest dividends and because I hold stocks that grow dividends, it's very easy to visualize, and it's easiest if we look at Realty Income simply because they pay out dividends monthly. In January of 2022, I was paid about $5.83. Move forward just a little bit in January of 23, $8.15. It's growing, but not at a high rate. But the higher those numbers get, the faster the snowball gets. So you can see, look, just a few months later, $25. A few months later, $27.90. And in the most recent month, it was $29.72. Quite a bit larger than it was just a few years ago. Now, let's go ahead and see exactly where my income came from in the month of September. Johnson & Johnson, about $33.62, Microsoft, $28, Realty Income, close to $30, Bank of America, a stock that's done really well for me, $25.64, Domino's Pizza, $16.23, Target, a stock that might be on the chopping block in my portfolio, $11.22, Visa, $25, T. Rowe, close to $13, Broadcom, $18.62, SCHD, $9.34, Waste Management, $19.18, and then United Health Group at about $31.40. Now, if we look at my daily dividend calendar, let's zoom out just a little bit. Essentially, we're just looking what days was I paid dividends, and you can see the annual totals here. And in 2022, it was just $1,289. So I'm already way ahead of where I was just a few years ago. We've nearly 4x'd that number. Now, if we look at the month of September, we can see what days I was paid. It looks like the 2nd, 9th were good days, a decent day on the 11th, a decent day on the 15th, and there's a day here that sticks out like a sore thumb, the 29th, when I was paid my SCHD dividend payment. Now, the last thing we need to do is to see how far away am I from achieving my goal of being able to one day live off dividends, and we can do that with my simple portfolio projection. I make relatively average assumptions because I don't want to be too aggressive. Now, when it comes to living off dividends, one of the things we have to consider is, yes, things like cost of living will change, inflation will change, but the key point is your cost of living is going to climb higher and higher every single month. So if your dividend income is staying stagnant, say that I'm making $5,500 a month, you can see eventually my cost of living is going to surpass my annual income. This is why you either have to buy stocks that grow their dividends at least at the rate of inflation, or 2, you can reinvest a portion of those dividends back into your portfolio to continue to grow your income. That's something we absolutely have to consider. So let's look at this. We can see right here, this is the point where I'm projecting that I'll be able to live off dividends forever. So let's see exactly how far away this is. If we start scrolling down, we can still see by around year 5, we're still not there, but we've made good progress. Monthly dividends by then should be around $1,846. If we keep scrolling down even more, we can see by about year 10, we're still not there, but monthly dividends should be around $3,853. And if we keep scrolling down even further, we can see right here, this is the point at which we'd be able to live off dividends because monthly dividends is higher than my monthly cost of living. And because I'm using a dividend growth strategy, even if I stopped reinvesting dividends at that point, my monthly dividends would still stay higher than the monthly cost of living because my dividends are growing at a rate faster than inflation. Now, something that I don't mention very often is I could actually do this even faster. As I get closer to the date of living off dividends, if I start utilizing more high-yield opportunities, I could certainly speed this process up. But with still being around 13 years away, I still think a dividend growth strategy, for the most part, is what makes the most sense unless I just see any massive opportunities in the market when it comes to high-yield opportunities. If we look at this at a much higher overview level, what we can see is pretty phenomenal. It's pretty exciting. In about 15 years, if I reinvest dividends, I'd be making around 76K, and if I don't reinvest dividends, it'd be about 50K. So a pretty stark difference between not reinvesting and reinvesting dividends. In 30 years, even if I don't reinvest dividends any, it'd still be about 166K, and if I do reinvest dividends, we're starting to get close to around 400,000. It's pretty mind-blowing. So there you go. That's exactly how much I made in dividend income in the month of September. Again, thanks to Dividend Watch for sponsoring this video. And you can check out tickerdata.com if you'd like to check out any of these spreadsheets. So go ahead and let me know what you think in the comments down below. And like always, please don't forget to like and subscribe to the channel.